Good morning. It's Thursday, June 6th, about 6 a.m. Central Time. It's great to be back here. I had a baby girl named London. So overnight, the precious metals are higher after 3 days of volatility, while the markets are trying to carve out a bottom. So part of my trading process when I'm away from desk for a few days, and I think many of you guys can use this here, is I come back and I zoom out on the markets and I look at the current trends from the trading style that I use. So if you're a day trader, you might come back and start looking at things from a 60-minute chart, then break it down 15-minute, 5-minute, and 1-minute. So on the daily chart, I'll look at one time frame longer, like a weekly chart, then go back to the daily chart, then look at the 60-minute chart. Try and take a look at the waves, the ripples, the currents, things like that when you're zooming out here. So what I use is more of a daily chart here because of the fact that many of you in our type of trading style is a swing trading. So step one is identify the trends and the levels in each of the three markets here that I watch closely. So your gold, your silver, your copper. So the gold futures right now are at a neutral trend. It was the sell-off on May 31st that took that market from that bullish trend down to that neutral trend. The key significance was that we broke below the 50-day moving average. We closed down that day about $20 and it was seemingly on the low. Since then, gold has hugged the 50-day moving average. Now, yesterday we closed higher and it tried to break away from that recent consolidation around the 50-day moving average, and it was the highest close on the week. Now, last night we tried to extend on those gains. So the market, it's going to try and push back to bullish trend here, and it's going to take a close over 2411. I think psychologically the 2400 level, if that's recaptured, that'll provide a lot of momentum behind it and the firepower it needs as a springboard to break through that 2411. Now, gold does not want to see a close below 2443, so call it the 2350 to 2343 level, as the remaining bulls, I believe, will abandon the market, which will transition to a bearish trend. So you'll see the market most likely have a quick fallout below that level there. So, and when I say the remaining bulls, I mean the guys that are the momentum traders, the people that just kind of enter into that market. They wait and see if the market's going to take off, and if it doesn't, they'll just jump out. They'll jump into something else that might look more attractive. Say the NASDAQ, say Bitcoin, say something else. Go to cash for the moment. Now, silver futures, they've been much more constructive. They've been remaining in the bullish trend, and I think that's where a lot of these momentum traders have kind of parked their money at the moment, and it reflects because of the average true range is about $1.05 right now, so it means that the market is still volatile. So we're moving about $1 a day, $1.05 a day. So on the mini contract, the 1,000-ounce contract, that's $1,000. On the 5,000-ounce contract, that's $5,000. So the critical level is 29.14. So if we close below that level there, it'll shift the market from that bullish trend to the neutral trend, which means that a lot of traders are going to start to come back out of that market. But what's beneficial, and I think what's really holding these people in that market, are the people that just use simple moving averages and things like that. So we are close to the 50-day moving average, which I think that the market, if it did break below that trend neutralizer level, that will bounce from there and will bounce off the 50-day moving average. So copper futures, they're in a bearish trend right now. We have to remember that we trade the market we're in, not the market we want. So we all want these markets to be going straight up from the lower left to the upper right at a 45-degree angle, and everyone who's a bull is making money in that market. The reality is that we are in a market here that is at a bearish trend at the moment. The trend neutralizer point is $4.83. We close above there, we switch back to a neutral trend. I think it'll take a close over $5 to really bring in those participants again and see that market take another leg up to those all-time highs here in recent contract highs. The market did hold the 50-day moving average, which should be really encouraging for the bulls. So the three things that we're going to be watching here today: the ECB's rate decision, they're expected to cut; the initial claims data, which if we see anything above 220, 218, things like that, that should help reignite that trend that the market believes that we're going to see those interest rate cuts in the US here. They are expecting some degree of a cut. It's about 16% chance at the July meeting, and it's really the September meeting, which is about a 61% chance that they do cut rates. We'll also see that trade balance data for April as well. If you got any questions, give me a call, 312-858-7303. Remember, futures and option trading does involve risk loss, may not be suitable to all investors. Good luck, good trading.